Have you ever wondered, why does price sometimes explode and other times barely move? Why does one breakout continue, but another one fails immediately? The answer isn't just in price, it's in volume. Most beginners only look at candles. Green means buy, red means sell. But professionals look deeper. They ask, how much money stood behind that move? In this lesson, we'll understand what volume really is, how to read it properly, how smart money uses it. Once you understand volume, you won't just see candles. You'll see conviction, exhaustion, absorption, manipulation. Let's begin. So what is volume? Volume is the number of units traded during a specific period. Let's look at the Bitcoin chart as an example. On the top left, you'll see the volume indicator. It shows the symbol and the total volume traded during that period. If you are on a weekly chart, it shows the total Bitcoin traded that week. If you are on a daily chart, it shows the total traded that day. Time frame changes the meaning of volume. Now look at this giant red candle. It shows 52.96 thousand. That means 52,960 Bitcoin were traded during that week. Now look at this smaller green candle. It shows 18.36K. That means 18,360 Bitcoin were traded during that week. So volume is simply participation. It tells us how active the market was. Now here's where most beginners get confused. Green volume bar means buying. Red volume bar means selling. That is wrong. Volume is just the number of transactions. Every transaction has a buyer and a seller. High volume means high activity. Low volume means low activity. The color of the volume bar simply follows the candle direction. It does not tell you who is in control or who is stronger to understand that. You must compare effort to result. And that's where real volume analysis begins. Before we learn how to read volume, we first need to put it on the chart. Step 1, go to the top of your chart. Click on Indicators. Step 2, in the search bar, type Volume. You'll see a few options. Select the standard one, simply called Volume. Click it, and that's it. The volume bars will now appear at the bottom of your chart. That is how you add the volume indicator. Simple. Now that we have volume on the chart, let's learn how to read it properly. Case 1, effort result alignment. Think of volume as the effort. Think of price as the result. When effort and result are aligned, big volume produces a big price movement. That tells us the move is real. Participation is strong. Conviction is present. There is commitment behind the move. This is not random volatility. This is structural support from real market participants. When effort matches result, the move has strength, and strength can sustain. This is the Bitcoin chart on the weekly time frame. Notice the large volume spikes here and how price follows. Volume expands, price expands. That tells us the move is real. It's fueled by strong participation and conviction. Effort matches result. This is effort-result alignment. Case 2, effort result, divergence. Huge volume, price barely moves, maximum effort, minimal result. That is a warning. When effort increases but result does not respond, something is happening behind the scenes. This often means large players are absorbing orders. Distribution may be taking place. Supply is quietly overwhelming demand. The market is active, but price is not progressing. Massive volume plus small candle is a red flag. When effort fails to produce result, a sharp move often follows. This is the chain link chart on the weekly time frame. We'll use it to illustrate effort-result divergence. Notice how high the volume is on this red candle. There is massive selling pressure, but look at the result. Price does not collapse. The bearish impact is significantly reduced. More importantly, buyers quickly step in and push price back up, creating a long lower tail. Huge volume, long lower wick on a red candle. That tells us something important. Selling was aggressive, but it was absorbed. Someone with deep pockets stepped in. Strong hands stopped the crash. The effort was huge, but the result was limited. That is effort-result divergence. And when this appears at key levels, it often signals absorption by large players. Case 3. Low volume expansion. Notice how volume remains small, yet price rises sharply. This doesn't necessarily mean strong buying. It often means there are very few sellers or that selling pressure has been exhausted. When resistance disappears, price can move quickly with little effort. Low effort, big result. But remember, continuation still requires confirmation. This is the Bitcoin chart on the weekly time frame. Notice how the volume in this area is relatively low, yet price continues to rise higher and higher. Why? Because Bitcoin had just gone through a major bear market in 2022. For months, volume had been declining. Selling pressure was gradually being absorbed. Eventually, sellers became exhausted. There were simply fewer sellers left in the market. So when demand returned, price didn't need massive volume to rise. This is an example of low volume expansion driven by exhausted selling pressure, not aggressive buying. Context matters. Volume alone does not tell the full story. So how does smart money use volume in trading? First, professional traders use volume analysis to identify the trend. This is the euro on the daily time frame. Notice how price keeps climbing while volume is increasing. That tells us participation is expanding, effort is increasing, and result is increasing. Then we see a pullback. But look carefully. The pullback happens on decreasing volume. That tells us selling pressure is weak. There is no strong conviction behind the retracement. After that, price makes another leg up and volume increases again. This is what a healthy uptrend looks like. Price and volume agree. Expansion happens on rising volume. Pullbacks happen on declining volume. Effort supports the direction of the trend. That is structural strength. You can use volume to determine the strength of the trend. Next, professional traders use volume analysis to identify potential reversals. Over here, notice the huge selling volume. There is strong participation behind this move. The candlestick pattern formed is a shooting star. A shooting star typically signals potential reversal, especially after an extended uptrend. Why? Because price pushed higher, but sellers stepped in aggressively and forced the close back down. Now, combine that with high volume. That tells us the rejection is not random. It is supported by real selling pressure. Large participation, strong rejection. Shift in control. Eventually, the trend reverses from an uptrend to a downtrend. Today, we learned what volume is. Volume measures participation. It represents the effort behind price. We learned to compare effort and result. When volume and price move together, the trend is healthy. That is effort-result alignment. When effort increases but price fails to respond, it's a warning. That is effort-result divergence. We also learned about low-volume expansion, where price rises quickly because resistance disappears. Professional traders use volume to confirm trends, spot weak pullbacks, and identify potential reversals. Price shows what happened. Volume shows the conviction behind it, and that makes all the difference. If you found this lesson helpful, please give this video a thumb up. Subscribe to the channel and turn on notifications for future lessons. I will see you in the next video.